Even though as of right now, at least as of filming this video, the stock market is basically still trading at all-time high, there is a small handful of dividend-paying, dividend-growing, long-term, super solid single dividend stocks that are extremely cheap right now, offering the potential best buying opportunity we've seen for certain names in quite some time. Now in this video, we're going to go over 5 different single stocks that have all been beat up like crazy as of recently, some of them due to things like earnings or whatever else the case might be. Now each one of these single stocks, like I said, is offering a massive starting yield, some of the highest that we've seen in quite some time. So if you want to see these 5 stocks and which ones are on sale as of right now, make sure to drop a like down below, subscribe, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The first dividend growth name that's offering a massive starting yield and that has been completely beat up as far as share price goes is ticker symbol WHR, or Whirlpool. Now Whirlpool, of course, is in the consumer discretionary household appliances names, and this stock did amazing back in 2020, 2021, but since then the price has slipped substantially, which again could be potentially, of course, maybe not, offering a massive buying opportunity for dividend growth investors. Now Whirlpool as of today is trading at just around $100 per share, and like I said, it was just a few years back that this stock was well over $200 per share very commonly. Now with where Whirlpool is trading as of right now, it's offering a 6.87% forward yield, which as you see right here in the 5-year chart, the average yield this one is seen is around 3.87%. So you could potentially get into this one with a very high starting accidental high yield at almost 7%. With a stock that at least historically over the long term has grown their dividend a lot, although just as of recent, the last few dividend payouts did not have any dividend increases, although Whirlpool has still sustained their dividend, which is of course a positive sign. Now as far as dividend safety goes, your guess is going to be as good as mine on this one long term, but we do have almost 70 years without a reduction, so that of course counts for something. For those deal chasers out there that are willing to take upon the risk, Whirlpool could be one to look into. Another potential accidental high yielder that definitely has some future risk, but also some future potential, is ticker symbol NEP, or NextEra Energy Partners. Now, in case you're not familiar with NextEra, I've heard about this one. I haven't really looked too deep into it though. NextEra Energy Partners LP acquires, owns, and manages contracted clean energy projects. It owns a portfolio of contracted renewable generation assets consisting of wind, solar, etc. Now, this one has been beat up like crazy in share price as of recent also, and is offering a 12.82% forward yield. Again, there's going to be some risk associated with this one, along with basically every other stock and ETF in the market, of course, some more than others. But the average 5-year yield on this one is almost 4%. So if you buy into this one today, you're getting over a 3 times the average yield starting with, which could, at least looking back in the future, be something you're very excited about. Now, as far as dividends for this one, we have 9 years of dividends without interruption and 9 years of consecutive increases. Even through all the craziness, this one has still been raising their dividend basically ongoingly every single quarter. Now, if you want some exposure to utilities, renewable energy, or anything of the sorts, this one is definitely beat up and worth looking into. Another dividend growth name that we all are very familiar with, United Parcel Service, UPS. This stock has slipped like crazy ever since the most recent earnings. It's trading at just over $120 per share, which is nuts because this stock was over $200 per share not all that long ago. Now, because the way this one is trading, it's offering a 5.2% forward yield with a 5-year average 3.33% dividend yield, meaning that if you buy this one today, if you buy UPS, if you're willing to take upon that risk that it might or might not have, you're getting almost 2 times the average dividend yield. Now, one thing that could be looked upon as bearish or bullish, of course, is the fact that UPS did raise their dividend just as of recently by a penny, but in the past, we've seen much larger dividend increases. Or to be more specific, on the last 20 years, because the massive dividend increase, of course, averaged out, we're looking at 10% per year, last 5 years, 12%. The latest dividend increase, though, very slow at 0.6%. Now, when stocks run into financial trouble, it's not necessarily a good idea to raise their dividend, of course. It's better to keep those profits within the company. But still, for dividend investors that potentially want to live off the dividend, UPS could be running into some trouble, but we're going to have to wait and see. Another long-term dividend payer that's offering a much higher than average dividend yield as for now and could be offering a massive buying opportunity is ticker symbol BTI, or British American Tobacco. Now, of course, this one's in the consumer staples tobacco space, so some of you might not even want to be involved in that one. No judgment there. And even though BTI offers a 45 in the dividend safety score, this one still has paid dividends for quite some time, and as of right now is offering north of a 1% higher yield than we've seen on average. Now, as far as dividend growth goes for BTI, we have 24 years of dividend growth and 24 years of dividends without a reduction. Pretty slow dividend growth though, 2% on the last, 3% over the last 5 years, and on 20 years we have 9% on average. So longer term, this stock has paid more and more in dividends, but just as of recently, it's been a little bit slower. Now, lots of you watching this video probably already own ticker symbol MO Ultra Group, which also has a very high starting yield. But I promise you, if you're interested in consumer staples tobacco, you're going to want to keep an eye on this one where it's been trading as of recently. Now, the last dividend growth stock that's offering a potential buying opportunity is ticker symbol BMY or Bristol Myers, which still offers a generally very safe dividend and a 5.66% forward dividend yield, which is basically double the average dividend that we've seen over the past 5 or so years. Now, Bristol Myers does have some dividend growth to go along with it. 5.3% in the latest, 7% in the last 5 years. In the last 20 years, it's been a little bit slower, 4% on average, but 53 years without an interruption and 17 years in a row of consecutive increases. Bristol Myers, at least historically, in the last 5 years is offering one of the best buying opportunities we've seen in a while. So those are 5 single dividend-paying, dividend growth stocks that are all offering a potential buying opportunity, at least going off of some past historical numbers. But now lastly, most importantly, I want to hear from you guys down below. Out of all the stocks right now in the market, the ones that are beat up at least offering a potential buying opportunity, what is the number one position right now that you think is on sale? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.